Bitcoin for all.
Have you ever heard the phrase Bitcoin has no top because fiat has no bottom? Bitcoin tends to continue appreciating value over the long term, even with intense volatility. That's because sound money is part of everyone's wants and needs. Nobody wants money that loses value year after year, right? In addition to being sound money, Bitcoin managed to digitalize trust. What the world demands most is a reliable way of conserving energy and value. Even before Bitcoin, the fiat system didn't provide any certainty that its money would not be diluted, modified, or have its properties manipulated. Bitcoin will continue to grow and be adopted because it has brought mathematical certainty to the economy. This calculation summarizes the economic incentives behind Bitcoin. The total number of coins that can exist is the sum of the number of Bitcoin mined in each block. For every 210,000 blocks that the network processes, which happens on average every 4 years, this reward per block is cut in half. A total of 32 halvings are projected to take place, and this progression ends at the block 6,930,000, when all Bitcoin will have been mined. This gives a result of 20,999,000 Bitcoin and 97,690,000 Satoshis. The so-called 21 million limit is a mental rounding off so as not to make it difficult to speak or explain. This calculation is poetic, it is mathematical and historical proof that Bitcoin is the first mathematically scarce, predictable and programmable money from launch until the last Satoshi is mined. This means that Bitcoin is the first money in which the rate of monetary inflation and the speed with which new currencies are created are both known decades in advance. Instead of increasing like the case of fiat currencies, monetary inflation in Bitcoin decreases. This is why prices tend to fall in relation to Bitcoin and why Bitcoin rises in value in relation to fiat money. There is no other financial system in the world with a degree of predictability like this. So you tell me, how much is that level of trust worth? Most people have never come across deflationary, independent, and digital money. At the end of the day, Bitcoin is a monetary technology. It is money with superior technology and properties. That's why Bitcoin's price reflects its adoption process. It has to do with the speed with which new technologies are adopted. Older technologies took around 100 years to be used by almost 100% of the population, such as the telephone, electricity, and cars. This delay in adoption forms what is known as the S-curve of adoption, as it appears in the electricity or telephone lines. New technologies such as the internet, cell phones, and smartphones took around 10 or 20 years to be totally adopted. The S-curve has become a J-curve or an I-curve, where adoption is vertical and faster. That's why Bitcoin tends to be adopted more like new technologies, even though it disrupts centuries of money being monopolized by centralized entities. This image shows where we are at the speed of adoption using the performance of ETFs recently launched in the US. The speed of adoption was vertical and higher than any other ETF launched previously. Bitcoin is being adopted in J or I, just like the internet or cell phone users. And that's what this study by Fidelity shows. Jerry Antimer, head of global macro at Fidelity Investments, posted this graph comparing Bitcoin's appreciation models if it followed the speed of adoption of the cell phone or the internet. If Bitcoin keeps up with the speed of cell phones, its price would move in a pattern similar to the blue line, hitting $239,000 in 2025 and passing $1 million in 2030. If it keeps up with the speed of the internet, it would be slower, reaching around $100,000 in 2025 and $343,000 in 2030. The most interesting thing is that Bitcoin has remained in the middle. It went to $100,000 in 2024, while Fidelity's projection was between $80,000 if it followed the path of the internet and $150,000 if it followed the adoption of the cell phones. So in other words, depending on the demand and compare it to the adoption of other technologies in the past, you can get an idea of the speed of adoption and consequently the appreciation of Bitcoin. Bitcoin is already showing signs of faster adoption than other financial technologies. The Bitcoin ETF itself, when launched in 2024, did in 8 months what the gold ETF took 19 years to do, reached $33 billion in value of assets under management. Notice how Bitcoin reached this mark in a vertical line, while the gold ETF made the same classic S-curve of older technologies. Bitcoin tends to continue appreciating because it is a superior financial technology with higher demand and limited supply, and should continue to do so. After all, the world is just beginning to learn about Bitcoin and to accumulate it. And that's why, as Bitcoin is adopted, theories of valuation begin to emerge. The stock-to-flow model measures the scarcity of an asset by calculating the ratio between the current stock and the annual production flow of new units. It compares how much has already been produced with how much remains to be produced. The higher the stock-to-flow, the scarcer the asset. This model was originally used to assess the scarcity of precious metals such as gold and silver. In the case of Bitcoin, the stock-to-flow model has become popular because Bitcoin has a higher and much more predictable stock-to-flow ratio than any other asset. It was only a matter of time before a model emerged trying to project the price of Bitcoin based on its degree of scarcity. Known as Plan B, the creator of Bitcoin's stock-to-flow model, argues that there is a historical correlation between the increase in stock-to-flow and the price of Bitcoin, suggesting that scarcity drives appreciation. However, while on the one hand this model is visually useful for understanding the growing scarcity deriving from halvings and the dynamics of Bitcoin throughout the cycles, on the other hand, it is not a predictor of price's future. The model has been modified several times as well. This image on the screen dates back to the creator's initial projection. It's also important to remember that scarcity, immutability, and the trend of increasing demand for money that appreciates in value are the factors driving Bitcoin to ever greater heights in the long term. Also, Ark Invest, another globally famous manager for managing funds with different types of technology, has also made a price projection for Bitcoin in early 2023. According to their report, Bitcoin is a long-term opportunity. They stated that, although 2022 was a turbulent year, Bitcoin remained strong and steady. Its foundations have strengthened and the hodlers have developed a long-term vision. The contagion effect that happened in 2022 with the bankruptcy of Celsius and FTX made Bitcoin's value proposition of decentralization and transparency even more evident. They also mentioned that Bitcoin could pass $1 million in the next decade. In their calculations, they established 3 possible scenarios: the bear case, the base case, and the bull case, all of these by the year 2030. They considered these scenarios of Bitcoin absorbs part of the liquidity of other markets, such as gold, institutional investments, as a censorship-resistant asset, as a currency of emerging countries in crisis, as part of the national treasury, as a remittance asset, and as an asset on company balance sheets. It's also shocking how Bitcoin can be part of all of these categories. Nothing else can fulfill all of these roles at the same time. So let's see what their estimations are. If Bitcoin has a CAGR, an average compound annual growth rate of 40% per year by 2030, it could be worth $258,000 per unit. Believe me, this is a pessimistic growth. It was stated in the bear case category. In the base case, the median scenario, Bitcoin would have a CAGR of 60% per year and a price in 2030 of $682,000 per unit. In the bull case, the optimistic scenario, the CAGR would be approximately of 75% per year and the price would be $1.48 million per Bitcoin. It is from this perspective of Bitcoin's absorption of value from other asset classes that various calculations arise, considering Bitcoin a sort of financial sponge. Absorption theories and theories stating that Bitcoin will suck up liquidity and value that would otherwise go to other assets as investors become increasingly exposed to it and insert into their portfolios. These theories consider Bitcoin to be a sponge that gradually sucks liquidity out of the fiat system, which is full of bad investments and negative interest rates. According to Jess Meyers, Bitcoin would capture 25% of global wealth and could be worth $10 million in the future. He posted this in the article Bitcoin's Full Potential Valuation. He explains that Bitcoin competes for liquidity with all assets, as this image shows. It competes with assets that lose value, such as vehicles and products, as well as with inflationary assets, such as fiat currencies. It competes with scarce assets, such as gold, real estate, and collectibles, and with equities, which include scarce assets. It also competes with assets that pay returns on growth. Bitcoin tends to outgrow all other assets since it mixes all of these into a single asset at an early stage of appreciation and growth. According to Jess's research, Bitcoin could absorb 50% of the market capitalization of gold, 5% of the market capitalization of collectibles, 5% of the art market, 15% of the stock market, 15% of the real estate market, 30% of government bonds, and 30% of the value of cash. This could take Bitcoin to a market capitalization of $10 trillion, approximately $10 million per Bitcoin. Bitcoin had a market cap of $400 billion when Jesse made this calculation in February 2023. If Bitcoin absorbed half the market capitalization of gold, it could multiply by 30 times in value. If it reaches its full potential, the appreciation could be 500 times. And now a simple calculation that circulates around the internet since the days when Ralph Finney exchanged messages with Satoshi Nakamoto. In email exchanges between Hall and Satoshi, they even calculated how much a unit of Bitcoin could be worth if it absorbed all the world's wealth. At that time, the world's wealth was somewhere between $100 and $300 trillion. Dividing this into 21 million units, that would give around $10 million per Bitcoin. Today, the world's wealth is around $900 trillion. Divided by 21 million, it would be equivalent to $40 million per Bitcoin unit. And I'm not even discounting lost Bitcoins, which would further increase the scarcity and the value of a single Bitcoin in this calculation. Another theory that has been gaining traction is that Bitcoin could demonetize bonds due to a drop in confidence in them. As institutional investors, individuals lose confidence in governments and their money printers, no longer believing that the governments can pay their debts to creditors, it is possible that the liquidity that would go into government assets might stop in its tracks. Remember that government bonds are considered the safest and most risk-free investments, which is not true. In fact, governments break down all the time across the world. Since Bitcoin is much more transparent, auditable, verifiable, and immutable than politicians, it is likely that people will come to trust in it much more than rulers who act according to their own interest. That's why Cathie Wood of Ark Investments and the risk manager Greg Foss have been talking about how Bitcoin could absorb value from bonds and even replace bonds in the future. According to Greg Foss, governments and the fiat system are backed by debt, and this indebtedness could be the trigger for a massive loss of confidence. In this situation, Bitcoin would be seen as an insurance against the government itself. The bond market and government bonds is around $400 trillion. It refers to the bonds given as collateral for debts between banks and governments. If 10% of this value comes out of these bonds and goes into Bitcoin, the market cap of Bitcoin could go up to $40 trillion. $40 trillion divided by 21 million units would give $2 million per Bitcoin. And all that with just a small change in people's perception of risk. If the world realizes that fiat currencies are the real bubble, this could happen even faster. Michael Saylor, founder of MicroStrategy, now just Strategy, also projected Bitcoin in 3 different scenarios: bear, base, and bull. In his calculation, he projected the price of Bitcoin by 2045 if it absorbed 2%, 7%, or 22% of the value of global assets. According to Saylor's analysis, in the worst-case scenario, if Bitcoin absorbs just 2% of the value stored in other asset classes, it could reach $3 million per Bitcoin in the next 20 years. In the base case, it would reach 13 million per unit. In the bullish case, it will reach around an impressive $49 million per unit. And that's why looking at Bitcoin at $100,000 right now, at the current levels, seems extremely cheap when compared to the potential projected by various studies and calculations. And even the Simpsons have already made a Bitcoin price prediction. In one of the episodes, a TV news program plays a sign suggesting that the price of Bitcoin has gone to infinity. It's obvious that no one took this projection seriously, even though the Simpsons have already got several real-life situations quite right. The Simpsons' prediction of Bitcoin going to infinity is basically what the stock-to-FOMO chart shows. The stock-to-FOMO chart is a rapid adoption chart and a satire of stock-to-flow. Imagine if the world went into desperation mode and decided to buy Bitcoin in a hurry. The result would be this graph, a massive vertical and upward tick. That's why it talks about FOMO, fear of missing out. In this case, fear of missing out the chance of buying Bitcoin. It sounds crazy, but this happened before. It's that old saying, history doesn't repeat itself, but it does rhyme. In Germany, in the 1914, with the hyperinflation in the German mark, gold went into a vertical parabolic movement. When the fiat currency of the time collapsed, gold appreciated just like the stock-to-FOMO chart. In other words, Bitcoin doesn't need to explode in adoption to have a chart like this. If fiat currencies go into hyperinflation, every country could have a chart like this in their local currencies, just no longer in gold, but in Bitcoin. That's why it's only now that traditional fiat investors are beginning to realize that Bitcoin's volatility isn't necessarily a bad or dangerous thing. Just as its value often drops sharply, its recovery is much more faster than any traditional asset. It also doesn't melt in value permanently like fiat currencies do. This is what is shown in this image, in which Fidelity over a period of 2 years compared Bitcoin at the bottom of the list with various other traditional assets, such as fiat currencies, gold, shares, stocks, bonds, etc. Bitcoin had the biggest drop, but also the biggest returns. This shows how volatility and sudden drops do not mean risk, but rather great buying opportunities for those who are already in the right mindset and understand that in the long term, Bitcoin should continue to grow in adoption and value. It's because of the greater understanding of Bitcoin and all the other aspects we've been explaining so far on Bitcoin for All that people, companies, and countries are accumulating and inserting themselves into the Bitcoin industry. Steve Wozniak, founder of Apple, Stanley Druckenmiller, renowned investor, Katie Wood, manager of Ark Investments, Robert Kiyosaki, author of the book Rich Dad, Poor Dad, and Jack Dorsey, founder of Twitter, now X, are examples of entrepreneurs in different niches who support Bitcoin. Companies such as MicroStrategy, Block, Tesla, Rumble have also added Bitcoin to their balance sheets. Even countries already have Bitcoin, either by buying or mining it, as is the case of El Salvador or Bhutan, or even indirectly through sagers, as it is the case in the US and China. Bitcoin should continue to appreciate in value because people are looking for reliable money that doesn't lose value and is predictable. That's why despite its volatility, Bitcoin's price chart shows an upward trend, also reflecting its ever-increasing adoption. In this lesson, you've seen why Bitcoin should continue to appreciate in the long term. We also introduced you to calculations and models for future price projections. This lesson probably gave you FOMO, right? But it is important to note that these are theses and projections. There's really no way of knowing in the short term what will happen to Bitcoin. Anyone who says they know, it's lying to you. You can only prepare for all scenarios, both up and down, and keep your feet on the ground. Ultimately, Bitcoin is a global long-term trend. Preparing today is easier than regretting not getting involved in the next 10 or 30 years. In the next lesson, you'll learn how to get Bitcoin and how to start accumulating it. See you there.